Where should you invest in 2026? Picking the right sectors can make all the difference. Today, we're breaking down the 7 most promising areas for your portfolio. Let's get started. First up, no surprise here, the technology sector. AI, cloud computing, and semiconductors are still the engine of growth. Artificial intelligence isn't just hype anymore. It's becoming essential infrastructure for almost every industry. Demand for cloud services continues to climb as more companies go digital. And what powers all of this? Semiconductors. These tiny chips are the new oil of the digital economy, powering everything from our phones to electric vehicles and massive data centers. When you're looking at tech, focus on companies with strong, consistent cash flow, not just the ones with the most buzz. Next, let's talk about renewable energy and clean tech. With governments worldwide pushing for green policies, this sector is set for long-term growth. The demand for solar, wind, and especially energy storage is exploding. We're in the middle of a multi-decade transition away from fossil fuels. While this sector can be volatile, its long-term potential is undeniable. Keep a close eye on battery technology and grid storage solutions. Those are the key areas that will unlock the next wave of growth. It's a marathon, not a sprint, but the payoff could be huge. The third sector on our list is healthcare and biotechnology. This one is incredibly resilient. Why? Because an aging global population needs more medical care, and innovation in biotech is happening at a breathtaking pace. Healthcare demand is what we call recession-resistant. People need medical treatments and devices whether the economy is booming or struggling. Biotech can be high risk, high reward, but for more stability, you can look at medical device companies and healthcare service providers. This sector offers a great balance of defense and growth. Moving on to number 4, Financial Services and FinTech. The way we bank and pay for things is changing fast. Digital banking and mobile payments are no longer niche, they're mainstream. Plus, as financial inclusion grows in emerging markets, millions of new customers are entering the system. Traditional banks that embrace digital innovation are finding new ways to grow, while pure-play fintech companies are disrupting payments and lending. In this space, always prioritize companies with strong balance sheets and a clear path to profitability over those running on hype alone. For our 5th sector, let's shift to a more defensive play, consumer staples. These are the companies that make things we buy no matter what: food, drinks, and household products. This sector is your portfolio's anchor during economic uncertainty. It's not about explosive growth, it's about stability, reliable dividends, and steady performance. If you're a more risk-averse investor or want to build a solid foundation for a long-term portfolio, consumer staples are a fantastic choice. They provide a sense of security when other sectors are choppy. Our 6th pick is infrastructure and industrials. Around the world, there's a massive push to rebuild and expand infrastructure: roads, bridges, ports, and grids. Governments are pouring money into these projects, which means long-term, stable contracts for companies in construction, logistics, and transportation. This sector might not be as flashy as tech, but it's the backbone of economic growth. It's a story of slow, consistent gains that are often less affected by market mood swings. Finally, let's talk about the energy sector, including traditional oil and gas. Global energy demand isn't going away anytime soon, and geopolitical events constantly affect supply, creating opportunities for investors. But the real story here is the transition. Many traditional energy companies are generating massive amounts of cash and paying out strong dividends. The smartest ones are also investing heavily in cleaner energy sources, positioning themselves as bridge players in the long-term energy transition. It's a cyclical sector, but for income and value, it's hard to ignore. So what's the big takeaway? No single sector is a guaranteed winner. The key to successful investing is diversification. You want to balance high-growth sectors like tech and biotech with defensive ones like healthcare and consumer staples. Always focus on the long-term trends we've talked about, not short-term market noise. Do your own research, build a balanced portfolio, and stay patient. Thanks for watching. If you found this helpful, hit that like button and subscribe for more investing insights. See you in the next video.